All right, let's get straight into your market dispatch. It was an absolutely chaotic weekend in the digital asset space, just packed with huge volatility and some massive liquidations. We're going to track the fallout, see which institutional players are feeling the heat, and look at the broader geopolitical pressures that are really shaping the week ahead. So let's break down these numbers. First up, the headline number, a truly staggering $850 million. That's how much in bullish bets got completely wiped out from the crypto markets just this weekend. I mean, what a brutal reality check for anyone who was overleveraged, and a crystal clear signal of the violent sell-off that really took hold. And look, this wasn't just some isolated event. The pain was spread all across the board. Major altcoins took a really significant hit. You're looking at Ethereum, Solana, and Dogecoin, all of them seeing drops of more than 6%. It was just a sea of red for some of the biggest names in the game. Leading the charge, as it so often does, was Bitcoin. After flirting with those all-time highs, the flagship crypto asset just faced this intense downward pressure, crashing from its peak. And that plunge, that was the primary trigger for the massive liquidation event we just talked about. So what does a crash like this actually mean, beyond the charts? Well, it means real pain for the institutional players and a massive, massive spike in market fear. Let's really assess the damage here. So the first major casualty of this price action, it's Bitcoin's prestige. Yeah, the plunge was severe enough to knock it completely out of the top 10 global assets by market cap. That is a huge psychological blow and a real reflection of the capital that just flooded out of the market. In this slide, this really illustrates the real-world consequences perfectly. We're seeing major corporate investors who are now underwater. MicroStrategy, with all their massive Bitcoin holdings, have officially flipped into the red. And it's even more stark when you look at Tom Lee's BitMine, which is now reportedly sitting on a $6 billion unrealized loss on its Ether positions. Ouch. So, no surprise here, right? All of this has sent sentiment just plummeting. The crypto fear and greed index has swung hard into extreme fear, actually hitting its highest point this year. This is a sign of widespread panic among investors, a mood we haven't seen in quite some time. But this brings us to a really key strategic question. While panic is definitely in the air, the analytics firm Sentiment points out that historically, peak fear often lines up with moments of maximum financial opportunity. Savvy traders are watching these moments very closely, seeing them as a potential contrarian signal that a market bottom could be forming. All this turmoil in digital assets, it creates such a stark contrast with traditional finance, where a very, very different story was playing out. It really highlights this fascinating clash of strategies. So contrast the crypto chaos with this, a massive $58 billion bet that Warren Buffett made before this market cycle even began is now reportedly showing positive returns. It is a masterclass in patient, long-term, value-based investing, the absolute opposite of what we saw over the high-velocity crypto weekend. And this philosophical divide, it became personal. Over at Davos, tensions apparently flared between JP Morgan's CEO Jamie Dimon and Coinbase's CEO Brian Armstrong. It reportedly escalated into a heated exchange. This wasn't just some friendly debate. This was the personification of the clash between traditional banking and the entire crypto industry. I mean, this just highlights the stark divergence. On one side, you've got the old guard. Buffett's patient strategy is paying off, and Dimon is out there voicing deep skepticism. And on the other side, the new guard. Tom Lee is staring down a multi-billion-dollar paper loss, and Brian Armstrong is defending his entire industry on the world stage. Two totally different worlds, and two totally different weekends. Now, this kind of volatility doesn't happen in a vacuum, It's attracting the attention of regulators all over the world, and the pressure is definitely mounting. So let's take a look at how governments are starting to tighten their grip. And this regulatory push, it's global and it's coordinated. You've got the European Commission calling on 12 member countries to get their crypto tax rules in order fast. Over in India, there's pressure to rethink their own pretty tough tax structure, especially as trading volumes are moving offshore. And Hong Kong is planning to submit a draft bill for a whole new crypto framework later this year. The trend here is clear. More rules are on the way. It's really important to place this regulatory squeeze in a broader context, though. It's not happening in isolation. It lines up with rising geopolitical tensions over trade, a global focus on securing sensitive tech like AI, and even a domestic legislative push to crack down on fraud. All of this creates a pretty powerful headwind for the less regulated corners of finance. So let's pull all these threads together. You've got the market crash, the corporate clashes, the regulatory pressure. What does it all tell us about the bigger economic picture right here in the US? Well, the key takeaway is really a theme of divergence. Just like we saw this huge split between the fortunes of traditional finance and crypto this weekend, the broader US economy seems to be splitting as well. And this quote from a recent analysis, it just sums it up perfectly. The current landscape is being described as one with a few winners, while a lot of other people continue to lose ground. It's an economy of diverging paths, where these massive gains in one sector can completely mask underlying struggles happening everywhere else. And that leaves us with the critical question for the week ahead. In an environment where the fortunes of different assets, different industries, and even different individuals are pulling apart so dramatically, the real challenge is to look past all the noise, past the fear, and ask yourself, where's the real, sustainable value to be found?